Hi, today we are going to discuss about section 121 exclusion. Section 121 exclusion. This is sale of main home. Suppose if you sell a main home, the home in which you are staying, the capital gains that you are getting up to 2.5 lakhs, that is excluded from your income. That means it is not taxed. Let me just take an example. Suppose if you bought a house for $1 lakh and you sold the house for $5 lakh, the 4 lakhs is the capital gain. I'm assuming it is a long term capital asset. So the 4 lakhs is the capital gain. According to this section, like up to 2.5 lakh dollar of capital gain is excluded. So the remaining 1.5 lakh is on which you will pay the tax. So up to 250 is for all, and for MFJ filing, married filing, joint filings, married filing, joint status, it is like 500k. For this we had to see, the first condition is that you had to see whether two tests are qualified or not, two tests are passed or not. The first test is use test, the second test is own test. So for the use test, prior to the sale date, suppose let me just say if the taxpayer is selling on 2025, during the last 5 years the taxpayer should use that home, the main home, for at least 2 out of 5 years. At least 2 years out of the 5 years he should use that home for, he should use that home and live in that. So for own test, he should own the house at least 2 out of 5 years. So for both use test and own test, he has to or at least 2 out of 5 years, the test should be passed. So let me just take an example. This picture looks clumsy, just focus on my voice. So the taxpayer bought this main home on 2010 for $1 lakh, and so he's selling on 2025. He's selling in 2025. He held the home for 16 years. That's a long year, 16 years. Okay. Okay. After 2010, so he bought in 2010, and the next 9 years he used for home purpose, and the next 2 years he used for renting. That constitutes like 10 years, and for the next 2 years is like home purpose, and again 3 years is like renting purpose. So during the last 5 years we'll check. First thing is like use test. He has to use the home for 2 out of 5 years, so 2 out of 5 years, that is passed. And for one test, he has to own the house for at least 2 years out of 5 years. I'm assuming he owned the house for the entire 16 years. So in that case, obviously 2 out of 5 years it is passed. So the first step we will see is that use test 2 out of 5 is passed, and own test 2 out of 5 is passed. So he bought the house for $1 lakh, right? And he is selling the house for $3.6 lakh. Okay. Now we will calculate the capital gains on that. So sale is like 360, cost is like 1 lakh, the capital gain is 260. Out of this, according to our section 121, 2.5 is not included, so the capital gain is 10,000. So this is wrong basically. So what means, we had to check the whole 16 years period. If any non-qualifying period is there, so the first thing is that for the 16 years the capital gain is 2.6 lakhs. So for the if there is any non-qualifying period, we have to apportion the benefit, and we should remove that. So we'll just take an example. So here 361, capital gain is 260. According to 2.5 is excluded. The remaining 10,000 is taxed. But we don't do like this. 360 to 260. 260 is the capital gain. Out of this 121 exclusion, we will figure it out. So during the last 5 years, it doesn't matter he rented it or not. Prior to the 5 years, we will see if he rented any. So the main concept of 121 is that he should use this house only for personal purpose. If there is any renting period prior to the 5 years, that is disqualified. So this 2.6 lakhs capital gain is for 16 years. So prior to this 5 years, if there is a renting period, we should remove that. So 2.6 is that 2.6 is capital gain is for 16 years. Out of this, 14 years is qualifying and 2 years is not qualifying, that is ineligible. So out of the qualifying capital gain 1 to 1 exclusion is 227, and 232 is ineligible. So simple is that 260 is the capital gain. Out of that, the qualifying period in the 16 years, 2 years is disqualified. So you can just say that here, during the last 5 years we rented 3 years, we rented for 3 years, that is not considered. So prior to the sale date, it doesn't matter whether you rented or not. The only thing is that you should use the house for 2/5 and you should own the house for 2/5. Renting doesn't matter. Prior to these 5 years, if you rented the house, that is considered as non-qualified. So we just move here. So out of 260, the non-qualifying part is non-qualifying for 32,500 is ineligible. We'll adjust with the qualifying part. We will get capital gains of 32,500. This is how it works. We'll revise it later again. So first we'll come to the concepts. So section 121 exclusion is only for the sale of main home by the taxpayer. He should use the house for only for personal use, and use test and own test should be qualified, like 2/5, 2/5. And for everyone it is like 250k. For married filing joint status, that is 500k. And you can use this section 121 exclusion like once in 2 years, not every year. Once in 2 years you can avail this, and you need not use need not be consecutive. So we'll check the use test for the last 2/5 years prior to the sale date. In that, use need not be consecutive. That means 1 year you can stay in the home, second year you can rent it, third year you can rent it, fourth year you can stay, fifth year you can rent it. 2/5 in personal use need not be consecutive. And the next thing, last 5 years renting doesn't matter. If there is any, again I am repeating, if you are renting the house prior to the 5 years, that is only disqualified. During the last 5 years prior to sale, if you are renting, it doesn't matter. We will treat it as it is qualifying period for the purpose of capital gain calculation. Okay, next we move on to, like, in general, use test is like 2/5, own test is like 2/5. We will see that. In case of in case of any hardship like change in employment or health issues, unexpected situations like that, we'll prorate. Like, how does this work? Means, suppose I bought a house and I stayed in the house for 1.5 year, and after that there is my I had to move to another state like Texas or New York. I had to sell my house, the main home, like 75%, like some main, prior to the sale date we had to stay for 2 years, but I have stayed for only 1.5 year. That means only 75% is eligible. So for this guy, let me just assume he's an MFJ filing status, the 500k capital gains is allowed. In that case, 75% of 500k, that is he can take. The only condition is that the reason we allow is only in the case of change in employment, change in case of any health issues or unexpected situations. We will prorate that and we will give capital gain benefit to this person, even though he didn't stay for 2/5 years. He didn't stay in the 2/5 years. So this is the only case. Hardship prorate, sale after 1.5 is the example. Percentage stay is equal to percentage capital gain benefit. The percentage, how much period he stayed, we will apportion that capital gain benefit. So in the case of military guys, you would be saying that military guys, they will be posting in Afghanistan, military tours, like places, they will be posted in different places at the time. They can't be so prior to the sale date, we will see at least 2/5 years they have to use for personal purpose. So prior to the sale date, if they didn't stay in the US 5 years, 6 years, they will be going for tours, right? In that case, 2/5 is substituted with 2/15. That means if let me just say that in 2025 military guy is selling the house prior to the 2/5 years, right? In this 2/15 years, we will see the last 15 years, at least 2 years he has to use for personal purposes. In general, it is like 2/5 years. For military guys, it is like 2/15 years. Like, out of 15 previous years prior to the sale, he has to use for at least 2 years for personal purposes. And own test is the same, at least 2/5. So it doesn't matter. Prior to the sale, he would be obviously owning the house, like for the entire period he will be owning the house. The only concern is that whether he will be using 2 by 15 is not 2 by 15 or not. The next condition is that mentally, in case of any mentally physically disabled guy who is unable to self-care himself, in general is like 2 by 5. For this guy, 1 by 5. What does this mean? So prior to the sale date, at least 2 by 5 years has to be used for personal use. So let us take this example only. In 2020, like in 2021, the mentally guy has stayed for use for personal use, and from 2022 he is in some daycare or in some other hospital like that from 2022 to 2025, and he came to in 2025 he sold the house. Like he stayed only for 1 year, and the 4 years he didn't even stay in the house. In that case, only for the mentally and physically disabled guy, he should stay for 1 year. 1 year is fine instead of 2 years. So next we have own use. Obviously this is common for everyone. They have to own the house at least 2 years out of the 5 years prior to the sale date. So in the case of MFJ has this higher benefit, like 500k of capital gains is excluded from their income. In the case of MFJ, both should use the house, like both the people should use the house. That means both should live in the house. And but for ownership, one is fine. Like house can be in the name of one person is fine. 1 person or 2 person is fine. At least 1 person house should be in the name. And in case of death of spouse, suppose sale should be within the 2 years, then full 500k is allowed.